We've had a very steady progression from the breakout in 2009, 20% advance, little consolidation, 20% advance 3 times, and now again 20% advance, and it would be nice to have a little consolidation here before we push out through 1800 and move on to 2000. But from a very long-term perspective, if you take a log chart and you draw a line from the 1970 low through the 2002 low for gold, and then drew a parallel line across the 1980-81 peak, you get this very wide channel, trading channel, and price has now just crossed through the midline. If we continue on this current trajectory, we could see 5,200 on gold by 2018. 2018,
that's how long it would take. By 2018. Ms. Yamada, I think your beautiful necklace and earrings just went up by about $300 in value. What could stand in the way or derail this forecast, both short and long term? Is there anything standing in the way of gold's advance that you can conjecture?
I can't find it at the moment, and I think it's rather intriguing that even as the markets have sold off, gold really hasn't sold off the way it did in 2008. Almost as though it's moving into what we could call the belief phase. Every advance has 3 phases up: the disbelief when people aren't too sure about getting in, the belief phase when people start to believe in the story, and then of course the final phase, which is the greed phase, and that's when you have to watch out a little bit. But we could have, I mean, the 20-year structural bull market in gold could take us right to where the 20 and 40-year cycles define a potential bottom in equities, which takes you out to about 2020.
Well, we had a 20-year bear market in gold, didn't we,
right.
Ms. Yamada? Yeah, so to your point, let me just ask this question. If it takes you out of your comfort zone, I apologize in advance. One of my guesses is that gold is going up as quickly as it is, apart from the fear trade, but because of the prevalence, the availability, the ease of investment, specifically ETFs. Do you agree with that or not?
Yes, I do. And there has been a correlation that has disappeared, I would say, between the evolution of these ETFs and the actual gold stocks. The gold stocks, for the most part, since the ETFs have become so popular, have underperformed gold, the metal, because you're going to have little, backing and filling and contra-trend moves. But that has been very prevalent over the past several years, if not a little longer.
Do you include any fundamental analysis when you do your work? A lot of people come on and say the reason you buy gold is everybody's printing money, and eventually the European Central Bank is going to do so as well. Does that play into your thinking at all, or are you solely technical analysis?
No, I think it's solely technical analysis, but obviously the price of the commodity is telling you that some of those factors may be behind what's happening in the price. And I think it's very definitely a safety net against growingly fiat currencies.
All righty. Louise Yamada, $5,000 gold. We'll have you back on again.
What's your money where a necklace is there, right? Thank you very much, Louise. I appreciate it.